Good morning. Welcome to the CUNA Advocacy Update. I'm Ryan Donovan, CUNA's Chief Advocacy Officer. It's Monday, August 24th, 2020. Here are three things you need to know about credit union advocacy this week. CUNA continues its advocacy in strong opposition to the new adverse market fee. Republicans will renominate President Trump as their candidate for president, and the comment period on NCUA's proposed rule on virtual exams ends next week. So we talked about this adverse market fee issue in last week's update after Fannie Mae and Freddie Mac made an announcement that they'll be adding an additional 50 basis point fee on refinanced mortgages. This fee is going to raise costs for families trying to make ends meet in these challenging times. And the announcement conflicts with the administration's recent executive action urging federal agencies to take all measures within their authority to support struggling homeowners. Of course, the fact that the fee is going to be imposed on September 1st is very concerning because there are already a number of mortgages whose costs have been locked in. So that's going to mean that the cost of this change, at least in the short term, is going to fall on the shoulders of lenders. We wrote to FHFA Director Mark Calabria about 10 days ago. We also joined a broad coalition of organizations representing housing, financial services, as well as public interest groups to issue a statement calling for this fee to be withdrawn. Here's what's happened since then. Fannie Mae, Freddie Mac, and the FHFA have been on the Hill, and they've been meeting with industry, including CUNA, to clarify the need for the fee and encourage support for it. They believe the fee is necessary to help the GSEs plug a substantial hole expected from losses mandated by the CARES Act, and that without this fee, FHFA fears that the GSEs could be at risk of failure. Given that GSE solvency is FHFA's primary responsibility, they feel that the fee is a small price to pay and that it would be borne by employed, higher income borrowers who can absorb the cost in return for getting lower interest rates for the life of their mortgage. Pushback from industry and the Hill that seems to be most effective is around the quick implementation date and the impact on mortgages that are locked in that is pushing significant unanticipated costs onto lenders. But FHFA is asking for industry to support this fee, and it's not clear that they will delay it without that in support. So we're working now with other financial services trade groups and our league partners to determine the next step forward. This issue will develop further over the course of the next week as we get closer to the September 1st deadline. Of course, the big news this week is that Republicans will meet to renominate Donald Trump for President of the United States. As I mentioned last week, despite our very significant political presence, CUNA and our PAC do not make endorsements in presidential elections. The good news is that whatever the outcome of the election, credit unions will have leaders in the White House who have a history of being supportive of a not-for-profit cooperative financial services option in the United States. Certainly, over the last 3.5 years, President Trump and his administration have been supportive of credit unions. They've supported a wide variety of regulatory relief measures, and President Trump met with several credit union representatives during the 2018 CUNA GAC. Vice President Pence is a longtime supporter of credit unions, and many will recall that he spoke at the 2019 CUNA GAC. On the Democratic side, as we talked about last week, Vice President Biden has been supportive of banking relief, bankruptcy reform during his time in Congress. And Senator Kamala Harris is a co-sponsor of our member business lending legislation, and she has been supportive of efforts to expand CDFI opportunities. There are no comment letters due this week, but next week we'll be submitting a comment on NCUA's proposal related to virtual exams. You can see here there are a number of additional proposals that are open for comment now, with the comments due between now and the end of the year. And finally, as a reminder, we remain engaged in discussions on the next round of COVID recovery legislation, which at this point doesn't look like it will come together until September. That's it for this week. Thank you for taking some time to join me for the advocacy update. I hope you found it helpful. Please don't hesitate to reach out to me if you have any questions or concerns. I hope you have a great week.